Welcome to the pharmaphorum podcast. This is web editor Nicole Raleigh, and today I have with me former surgeon and investment banker Ali Pashazadeh, CEO of Treehill, a strategic and financial advisory firm for the life sciences sector. Our discussion today will focus on the current perfect storm, if you will, in biotech, and why the skies might not be quite as grey and foreboding as at first feared. So, with no more to do, welcome, Ali.
Hi, Nicole. Thank you for having me.
Before we sink our teeth into that central topic today, Ali, I was wondering if you could share with our listeners a little bit more about yourself first, about your journey to today and the passions that drove you to doing what you do now with Treehill.
So I started off life as a biochemist at Imperial College, looking at the chemical pathology of cancer. This is around the time of the aromatase inhibitors. I then went to medical school at St Mary's Hospital in Paddington, London. I graduated as a doctor. I then trained as a surgeon, and within surgery, focused on plastic and reconstructive surgery. I've kept my medical license, so I still practice a couple of days a month in the ER department. I left full-time medicine in 2000, did an MBA at London Business School, and then started off a investment banking career, initially at Goldman Sachs, then at UBS, followed by moving to Blackstone, started up the healthcare team at Blackstone, ran that for 2 years, and then spun that out to form Treehill Partners in 2011.
That's a rather interesting journey, Ali. Thank you for sharing that. And we'll come more into the sort of unique angle this permits you in your work today. But just to recap, we'll be discussing the perfect storm in biotech at the moment. And biotech, for those listeners who have perhaps been living in a cave, biotech finance has now encountered what can arguably be termed the worst perfect storm in its history. And private investment in biopharma is in the midst of the longest drought. Many companies, even if financing reappeared tomorrow, say, have cut back. And it's been said they've been cutting back too far to be investable, and their IP is also aging. And furthermore, of course, biomedical public funding is now being slashed in the US and in Europe, granted for different reasons, and returns to investors have taken a further hit with political drug pricing pressures, decreasing returns on therapies that even reach commercialization. And additionally, the threat of trade wars is very much current, as well as the implementation of the Biosecure Act, which could have a further effect globally. So, Ali, run us through it all, if you will, and tell us, how can
Sure.
this perfect storm change the biotech sector for good?
So since about 2019, we've had a difficult financing environment. So, we've had a pandemic, for a 2 to 3 year period. During that time frame, anyone who was looking to start a clinical study was able to start this. Anyone who was able to start the study was then having problems recruiting. So they paid for a study, they got clinical sites, they got to the FDA, and they either couldn't recruit patients, or if they did recruit patients, they couldn't follow patients up. So we had a whole generation of clinical studies that were unable to be completed. From a capital markets perspective, we had an incredibly hot capital market up to that point, and a lot of companies went public primarily based on hope value. So companies that had a very bright future raised a lot of money at very good valuations, but then couldn't do follow-on offerings in the market. So if we look at the public markets at the moment, at any given time, there's over 200 biotech companies that are listed that are trading below cash. So companies that have really no tech value. If you then look at companies that are in need of capital, so the ones that are existing on the market, there's about 200 companies or so that need to do follow-on offerings to keep themselves going. If you then look at the private market, at any given time, there's probably about 150 or so companies that in a normal market would have gone public. So if the public markets go back to normal tomorrow, if we look at the number of IR firms, the number of investors, the number of banks that could run roadshows, there's probably about a 4-year backlog for companies who are high quality companies to go public. If we then think of the domino effect of low liquidity, companies have over time streamlined what they do. So a lot of times at Treehill, we look at companies where They want to run a clinical study, and they will run the clinical study they can afford, run the clinical study that they need to run. So a lot of times we're looking at companies that are running phase ones. They've got incredibly positive data, directional data, which you wouldn't expect in a phase one, and then are looking to combine phase two, phase threes, and somehow just skipping the time frame from the phase two. And what that means is that they are seeking to work around the low liquidity market, go out for one capital raise, run two capital raises, and in that context are designing clinical studies that are trying to achieve too many things all at the same time. So if we think of the capital markets being low liquidity, we have up to recently had the governmental sector continue. So NIH and Cancer Research UK and a whole group of other company source of funding. And those sources of funding are now taking a second look at whether they continue to fund. We then look at that in terms of context of management teams that are over time are asking themselves the question, do I need a full C-suite? Should I have a fractional CEO or a fractional CMO or a fractional CSO? Should I look at outsourced providers to provide me a C-suite? So 85% or so of the companies we met at JP Morgan in January, if you handed them 100 million and said, this is your dream that you're looking to raise 100 million, I will hand you the 100 million. What would you like to do with the phase three? So I give you the money today. Who is the team that will finalize the study? Who will oversee the study? Who has the capabilities and experience to accept that capital? About 85% of those companies don't have the experience to take in the money and then to execute on the clinical study. So if we then on top of that layer on, as if those weren't enough layers, so let's now layer on potential tariffs in terms of APIs all the way through to fill and finish. We then add in the potential pricing pressure. I think we have a perfect storm when it comes to every single variable that's there is now in flux. So then you could say, well, is it time to capitulate? Is it time to say, look, this is the worst storm in history? Or do you lean into it? So let's think of it from a patient's perspective. We have a significant number of true unmet medical needs could significantly be improved. So that some of the statistics that we put out as Treehill in about 2 years ago was of the 1,200 clinical studies that we looked at that were run by a global CRO, so 1,200 clinical studies, only 5% of them had a commercially relevant TPP at the time of running a phase two or a phase three. There was a greater than 40% data capture issue in the studies that were being run. And when we're talking about material data capture issues, was the study positive or was the study negative? If we look at the 37 to 40% budget overspend in terms of con mods that clinical studies go through, there's significant fat on the bone, there's significant areas for improvement in terms of how we run clinical studies. So if we take the fact that funding landscape has changed, so in order to evolve, we would need to run better studies at a much more cost-effective and cost-impactful way. I think that we will see the next generation of biotechs that are looking at impactful investment of capital rather than, it's a highly liquid market. And if this study doesn't work, then we'll run another one. So we're now actually seeing the emergence of very, very good CEOs looking at tough indications who have very good molecules, very clear pathway to commercial success, who are asking us from a Treehill perspective help in terms of, or input in terms of, how can I make my study most impactful? And that's where we've been spending the past 11 years, which is working with companies with a very simple premise. If we stop blaming the molecule for failures and we take ownership of clinical studies reading out positive and also clinical studies reading out negative, I think we could design better studies that could be more targeted to the commercially relevant target product profile, and we can weather this current storm. When the storm passes, which it always does, we will end up in a much better place than we were in 2019. So I think there's an ownership of the variables that we can control, adapting to those, taking ownership that when molecules fail, when clinical studies fail, it's not the molecule that can be blamed on every single occasion. My estimation over the past 25 years is probably 80% of those failures could have been avoided. They could have been predicted, as in that molecule shouldn't have gone into that clinical study, or the clinical study should never have been run. And we see this on a day in, day out basis where people are running a clinical study to get to the next point rather than develop a commercially relevant product. So from our perspective, it's a very exciting time. And one of the things that we've been relatively vocal about is how many times have we heard studies being run, preclinical studies by the NIH or by Cancer Research UK, where there's fantastic science. And when you ask for accountability and you say, so why are you running that study? How does that lead to a developed drug that will get to patients? The typical comeback is, this is high quality science. And from a medical perspective, high quality science is fantastic. But unless it actually gets to a patient, it's an academic exercise. And academic exercises benefit the academic ecosystem around the experiment, as I did in 1990 in breast cancer. But unless I developed a drug, I wasn't benefiting anyone but myself and the greater community. So I think we need to go back to the basics that develop drugs for unmet medical need. I think we need to be honest with ourselves when the molecule has no chance of success, or the product we're developing is aimed at a market which is already satisfied.
Thank you for that very thorough overview, Ali. I want to unpack it slightly, but you've touched upon pretty much everything we want to be discussing
Mhm.
in this podcast today. So you've mentioned that the funding landscape has changed and that there's been this shift from more focus on cost effectiveness to also looking at cost impact and generally impact very much more focused upon rather than simple liquidity. And you've projected or predicted that when we do get through, or when the biotech sector gets through this perfect storm, it could be better or will be better than
Mhm.
2019. So I was just wondering if you could maybe touch upon and unpack slightly further what it means to be going back to basics, what it means to be controlling the variables, and maybe
Sure.
share with listeners how developers, CDMOs, CROs, and all other companies involved in therapeutic development will have to, how they will have to adjust to this new landscape, this new world, and maybe give some further examples.
Sure. So if we hone in on the CRO landscape, so we have been recipients of the services of CROs for the past 15 or so years. If we then had the opportunity to work as an integral part of a number of CROs and CDMOs, and I think that the base interaction is as a service provider from a CRO, which a CRO, a company will approach the CRO and say, "I would like to run this study." The CRO has a number of options they can take. One is as an order taker. So you tell me what study you want me to run. I will run the study that you've asked me to. Second approach is I'm looking to run a study in an indication. And within that indication, the CRO then goes and looks at all the precedents and the prior clinical studies and the prior protocols and comes up with a new protocol. I'd say that so that's vertical number two or option number two. And option number three is the CRO engages with the company and says, I understand what you're trying to achieve. Let us put all our experience and our tens of thousands of people that work at the CRO and the hundreds of clinical studies we run at any given time. And we know what your objective is. And within your objective, we think you could develop a better clinical study for the same price that has a better chance of success, and you have a more commercially relevant product at the end. So if we think of percentages, the order taking approach, which is option number one, I would say is probably 80 to 85% of the interactions that we've seen with the CRO. Probably another 10% is let me look at what's been run before and I will run your molecule through the same protocol that someone else had thought through. And less than 5% is let me engage with the company in a thoughtful dialogue to say, I know what you're asking me to do and I understand what your objectives are, but I think this is a study that better suited for your molecule. And where we've been working as Treehill for the past 4 or 5 years is we've developed a model called the clinical development optimization model, the CDO model. And the CDO model works with companies and interfaces with CROs in doing exactly that, which is one, is your molecule suited to go into a clinical study? Do you have the correct preclinical data package to go into the clinic? When you've gone into the clinic, have you run the right PKPD, the right tox, and have you chosen the right indication? When choosing an indication, I'd say 70% of the time when we ask a company why they went into indication is because a KOL led them down a certain pathway because they were excited about that indication, or they said, look, this is a really, really quick way to get on the market, and then we can go back and actually do a much bigger indication. And what you do in a preclinical context has a direct impact on your commercially relevant offering 10 years down the road. So I'm not saying that Treehill knows any better than anyone else or we're the smartest cats on the street. That's absolutely not where we are. What we're saying is, if you look at the preclinical context and think of it as vertical drug development is incredibly efficient. People will run the preclinical data generation in a very effective way. They will generate the perfect phase one clinical data in 95% of cases. But if you then look at it horizontally from the preclinical context all the way through to the commercially relevant blockbuster, for example, I'd say that that is where the inefficiencies lie. And that's where the CDO model comes in, where we say to a company, as you know, we have multiple calls, okay, multiple calls a day, where we say, okay, so I understand where you were looking to go, and I understand where you have data. Have you thought through the fact that the leading drug in that area, for example, Keytruda, comes off patent in 2028? What happens to your drug in 2029? And they go, well, I haven't thought of that because I'm just doing my phase one or I'm just doing my phase two. That's tomorrow's problem. And unless you think about tomorrow's problem today, you do see lots of companies. So 38 of the Keytruda combination products that are in phase three development have no commercial partner. So we see about 400 programs partnered with Keytruda. Some of them have been partnered. The other ones who haven't been partnered, about 38 is the latest number. Well, what happens to those products? They've got great data, and Merck has been generous to share Keytruda with them, typically at no cost. Patients have been exposed to an experimental drug that doesn't have a commercialization partner. So what happens? They fail in phase three, they don't get to a patient. If they succeed in phase three, they also don't get to a patient because they don't have a commercialization partner. So the question here is, why did we not think about that before? And I guess my approach from an Ali perspective is, I started off in medicine to try and help patients. That genuinely was the innocent approach of a 16, 17, 18-year-old getting into medicine. The drug development approach should not be any different to that. So our main approach at Treehill and the generation of the creation of the CDO model is, if we're running preclinical experiments, we have to take ownership that we're taking animal lives, which is a privilege, not a right. We should be generating that data and we should be publishing that data so other people are not exposing preclinical models unnecessarily. When we're running clinical studies, again, having access to patients who've got various conditions is a privilege, not a right. And only 11% of IST data is ever published. So the same patient may be exposed to multiple therapeutics or experimental drugs because the previous group didn't publish the data. So from our perspective, let's take ownership, the fact that we're exposing patients who are trying to help the greater humanity doesn't usually help the patient that's in the clinical trial, but there are a whole bunch of other people that are helped by that therapeutic. And if we only publish 11% of our data and we run clinical studies and we haven't really thought through which patient benefits from it, I think we're doing a disservice not only to the molecule, but more importantly to the patients.
Absolutely. I think your wording there was very on point with this privilege as opposed to right when it comes to within the studies animal lives and also further on clinical studies with patients with unmet needs. So all this taken into consideration and moving to our sort of summative question for today's episode, All being well, Ali, what will this new biotech sector look like if such suggestions are taken on board in the near future?
What will the new biotech look like? I think we will have this is crystal ball gazing, so it'll 100% be incorrect, but hopefully directionally it's suggestive. I think that you can run most companies at probably about 20 to 25% of your OpEx that you were running in 2015, for example. And from a Treehill perspective, we own and run companies, and the companies that we take ownership of and we invest in, we have an OpEx anywhere from 20 to 25% of comparable companies that were established 10 years ago. I think that the clinical study approach, I think there's a significant, probably 10 to 15 percentage points that we could add on to historics. So when we historically said phase one assets have a 1% chance, phase twos have a 25% chance, and phase threes have a 50% chance, I think those percentages are historical and I think they're dated. And I think if we take another straw poll 15 years down the road, I'm hoping those will be 10 to 15% higher because we've actually taken account all of the variables that we've just discussed. I think from a capital allocation and capital utilization perspective, I think the return on investment needs to be significantly higher going forward than it has been historically to attract people to the biotech sector who, for a period of time, have rotated out into other industries. And I think the return on capital needs to be at least 10 to 15% higher than it was before to be able to attract people. But then the investments made should actually have far more impact because the interface between investors, management, and board, I think needs to change because typically you've got an investor who says, look, I want the greatest return. Management saying, well, I want to move it forward, but let's not run a study today that could also fail today because I kind of need my job for another couple of years. And board saying, let's not take a huge amount of risk because we don't really want to fail. I think the unity needs to be, how do we get the answer as soon as possible? If this molecule is not going to succeed, we should know today that it doesn't succeed rather than tomorrow. And I think that level of selflessness is probably the right term, doesn't exist in the market.
No.
And if, again, going back to a medical context, when you're telling a patient that they have a terminal condition, if you look at over the past 30 years of being a doctor, whenever I've broken news to someone, which is the worst news they would ever hear, and news that you would almost do anything not to give someone, the word that comes after that, which one would never predict, is thank you. Patients always say thank you. And you've just given them the worst news you could possibly give them. And any person who still has a heart, when they break that news, usually remembers that interaction for the rest of their life because you've told someone something that they don't want to hear. And in that context, people say thank you because you've empowered them to understand the truth and they now have an ability to address it. Interestingly, with molecules, we're unable to do that. When you say to someone, look, this molecule just doesn't have the characteristics to go into a phase two, kill the program. There's almost never a thank you. There's always a, well, actually, we just don't know yet. And you think, isn't that interesting that a program seems to have an inability to take negative news, but they want you to prove somehow that that study will fail? I don't quite get that. So I think once we change that paradigm, and I'm equally as guilty of it as well. So I'm not saying somehow we're completely immune to it. There are programs that we get emotionally attached to, and we want those programs to succeed. I think if we can take that emotion out of drug development, I think the next generation of biotechs will be exciting. I think there's a huge wave coming from China. My team just spent 2 days in China, met 72 companies, of which probably 50 of them were very exciting technologies, first in class, best in class, possibly coming up. There's a huge wave coming out of Korea where there's great technology, great leaps and bounds forward in ADCs and bispecifics. There's a huge crop coming out of the US as we would typically expect. So there are new technologies coming on board. I think those CEOs are now beginning to realize that as the world has changed and probably isn't going to change back, the approach to drug development needs to be fundamentally different.
There's much food for thought and pearls of wisdom within that closing statement there, Ali. So for today's episode at least, we will close it there. I thank you very much for your time. It's been an absolute pleasure. And here's perhaps to a future conversation.
Thank you very much.
And that concludes another episode of the pharmaphorum podcast. You can find more information about this episode, including a download link and information about previous installments at pharmaphorum.com/podcasts. The pharmaphorum podcast is also available on Apple Podcasts, Spotify, Overcast, Pocket Casts, Podbean, and pretty much wherever else you download your other podcasts from. Just search for pharmaphorum and follow and hit subscribe. Of course, don't forget to visit our website itself, where you can sign up for daily and weekly news and analysis bulletins. And do follow us on Blue Sky and LinkedIn at pharmaphorum. That's all for now. Thank you for listening.